So welcome to all of you Shiksha 360, and today basically we will start our MCQ discussion on chapter number 3rd. So let's start our MCQ discussion, that is LRB chapter number 3rd, question number 1 to 16. So let's move towards the question number first. So under section 21 of the Banking Regulation Act, RBI issues direction basically to banks in respect of under section 21 clear of the Banking Regulation Act. Basically, RBI issues directions to banks basically with the respect of first one is loan and advances. Second is option number B, that is audit and inspection. Third number option number C is capital structure of banks. Option number D is corporate governance. Clear. Option number D is corporate governance. Clear. So what is the correct answer? So the correct answer here is to be basically option number 1, that is loans and advances. Clear. That is loans and advances. Clear. So option number A is the correct answer here. Now move to the next question. Question number 2. RBI can regulate. Clear. Basically, RBI can regulate acceptance of deposits, including the rate of interest on deposit by banks under which section of which act? RBI can regulate basically acceptance of deposits, including the rate of interest on deposits basically by bank under which section and of which act? Clear. Basically, we have already discussed under the part 1 of chapter number 3. Clear. Basically, that is under section 35A of the Banking Regulation Act. Clear. That is under section 35A. Of Banking Regulation Act. Clear. Of Banking Regulation Act. So the correct answer here is to be basically option number B is the correct answer. Now question number 3rd here is to be basically Banking Ombudsman basically settles disputes between. Clear. Banking Ombudsman basically for settling the disputes. So Banking Ombudsman basically settles disputes between. First one is between two customers, between a customer and a bank, between two banks and between a customer and the bank, or between a customer and the government. Clear. Or between a customer and the government. So what is the correct answer? Clear. So what is the correct answer? Basically, Banking Ombudsman basically settles disputes between the two customers, between the bank and a customer, between two banks and between a customer and the bank, or between a customer and the government. Clear. Basically, between a customer and the government. Okay. So basically earlier, basically Banking Ombudsman basically settles to dispute between the two banks also. Clear. But later on in the year 2006, this is to be withdrawal. And now basically Banking Ombudsman basically settle disputes basically between a bank and the customer. Clear. Or between a customer and a bank. Clear. So option number B is the correct answer. That is between a customer and the bank. Now move to the next question. Question number 4. RBI can issue direction basically to banks. Clear. RBI can issue directions to banks on loans and advances. Clear. Basically, RBI can issue direction basically to banks on loans and advances. Clear. Basically, in the interest of which? In the interest of government. Second one here basically in the interest of borrowers. Third option here basically in the interest of public. Or fourth option here is to basically in the interest of borrowers, government, public, and banks. Or fourth option here basically in the interest of borrowers, government, public, and banks. Clear. So what is the correct answer? So RBI basically can issue direction basically to banks on loan and advances. Clear. In the interest of government, no. In the interest of borrowers, basically no. Basically in the interest of the public. Clear. In the interest of the public. This one here is to be the correct answer. That is basically in the interest of the public. Clear. So option number C is the correct answer. That is in the interest of the public. Now move to the next question. Question number 5. So the purpose of issue of selective credit control. Selective credit control, that is basically we have to lend specific to these sectors up to specific limit. Clear. We have to lend specific amount basically to these specific sector, or we can say that like priority sector. Lending, clear, basically for the benefit of the society or for the nation, clear. The purpose of issue of selective credit control basically by the RBI is to regulate the availability of credit basically according to, clear, is to regulate the availability of credit basically according to, clear. I have already explained what is the meaning of the selective credit control, that is basically to the specific sectors basically we have to lend specific basically lending as per the limit. So what is the purpose of issue of selective credit control basically by the RBI is to regulate the availability of credit basically according to. First one here basically that is priority of borrowers. Second one here that is priority of RBI. Third one here basically that is risk involved in the loan transaction. Fourth one here basically that is national priority, clear, that is basically national priority, clear. So priority sector lending. Why basically there is a priority sector lending? It is the priority of the RBI or priority of the borrower, clear. Priority sector lending basically it is not the priority of the borrower, not the RBI, basically it is the priority that is basically to develop the nation, clear, that is to develop the nation, that is basically we can say that it is the national priority, clear, that is basically it is the national priority basically for the development of the nation, clear, for the development of the nation. So basically we can say that basically it is the national priority. So option number D is the correct answer here, clear, option number D is the correct answer here. Now move to the next question, question number 6. Which of the following prohibits lending at very high rates of interest and empowers reopening of such contract, clear, that is basically which of the following act which basically stops or prohibits lending at very high exorbitant rates of interest, that is basically very high rate of interest, and empowers basically reopening of such contract, clear. First one is the Serious Loans Act, second one is the Reserve Bank of India Act, third one is the Banking Regulation Act, fourth one is the Companies Act, clear. Basically we have already discussed this thing in chapter number 3 part 2, clear. Which of the following basically prohibits lending at very high exorbitant rates of interest and empowers the reopening of such contract, that is the Serious Loans Act 1918, clear. The Serious Loans Act 1918, clear. So option number A is the correct answer. Now move to the next question, question number 7. Which of the following basically provides that a transaction between a banking company and its borrower basically cannot be reopened by the courts on the ground that the rate of interest is excessive, clear. This point also we have discussed under chapter number 3 part 2 along with the Serious Loans Act, clear, along with the Serious Loans Act. Basically they are asking basically which section, clear, basically which section basically provides that a transaction between a banking company and its borrower basically cannot be reopened by the courts on the ground that the rate of interest is excessive, clear, that the rate of interest is excessive. So that is basically not the Serious Loans Act, clear. This is not the section of the Serious Loans Act, basically this is the section 21A, clear. This is basically the section 21A of the Banking Regulation Act, clear. This is the basically section 21A of the Banking Regulation Act. So option number C is the correct answer here, clear. Option number C is the correct answer here, that is section 21A of the Banking Regulation Act. Now move to the next question. Which of the following statement basically does not match to its answer, clear. Which of the following statement does not match to its answer, clear. Now we have to discuss all these options one by one. First one is basically bank can lend any amount of loans basically to their directors. Bank can lend basically any amount of loan basically to their director, whether this is false or true. This is false, clear. So basically this one is the correct one, clear. This one is the correct one. Basically we have to find that which one of the following statement basically does not match to its answer, clear. So this one is the correct one, that is bank can lend any amount of loan basically to their director. This one is false. Yes, this one is a false here. Next one is basically RBI issues direction basically to the banks on loan and advances, clear. Basically RBI issued direction basically to the banks on loans and advances under Section 35A of the Banking Regulation Act. Clear? Under Section 35A of the Banking Regulation Act. Clear? RBI issues direction to the banks on loans and advances under Section 35A of the Banking Regulation Act. Clear? This one is false or true? This one is false. Clear? Basically, under which section? Under Section 21. RBI issues direction basically under Section 21 of the banking. They are asking here to no. Basically, this is false. Clear? So this one is false. So this one is our answer because they are asking basically which one of the following statement basically does not match to its answer. So option number B is the correct answer here. Clear? That is basically this statement they have given that is false, but they have given here that it shows to be true. Clear? So RBI issue direction basically to banks on loans and advances under Section 21 of the banking regulation. Clear? If they are mentioning 21, so that is to be correct here. Here they are mentioning 35A, so this one is to be wrong here. Clear? So this one is to be wrong here. So option number B is the answer here. Now move to the next question, question number 9. So directions under Section 35A, clear? Basically directions basically under Section 35A of the Banking Regulation Act basically can be issued by the RBI too. Clear? You know that basically that is direction basically they have given under Section 35A. That is basically for the interest rates. Clear? Basically for the interest rates. And that guidelines basically are for the specific and basically for the overall management of the bank. Clear? So that are basically can be issued by the RBI basically to a particular bank only, all banks uniformly, a particular bank, or uniform to all banks, or not to a particular bank, but generally to all banks. Clear? Basically, but generally to all banks. Clear? So it depends. So can be issued by the RBI basically or to a particular bank or uniformly to all banks. Clear? Either to a particular bank or to a uniformly to all banks. Clear? Like basically sometimes basically there is a section on any specific bank. Clear? So that is basically we can say that basically to a particular bank. Clear? Like basically if interest rate is to be increased. Clear? If interest rate is to be increased, so we can say that basically it is uniformly applicable basically to all the banks. Clear? It is basically uniformly applicable basically to all the banks. So like you will know that basically on 4th of August, sorry, on 5th of August, RBI has enhanced or basically increased the RLR by 0.50 or by 50 basis point. Clear? By 50 basis point. Clear? So basically this is basically applicable or uniformly to all the banks. Clear? Or uniformly to all the banks. Clear? Or like basically there is some restriction basically due to the financial condition of any bank is not up to the mark. So basically specific restriction basically for a particular bank only. Clear? So the correct answer here is to basically option number C, that is either a particular bank or uniformly to all banks. Clear? Or uniformly to all banks. Now move to the next question, question number 10. So under Section 26, clear? Under Section 26 of the Banking Regulation Act, the banks are required to file a return with the RBI basically relating to. Clear? Under Section 26. Clear? So please tell fast. This we have already discussed under the part 1 and part 2. Clear? In detail. So under that is DEF account. Clear? That is DEF account, DEAF. So under Section 26 of the Banking Regulation Act, clear? The banks are required to file a return basically with the RBI relating to. First one is basically unclaimed deposits. Second one here that is basically selective credit control advances. Third one is basically advances to sensitive sectors of the economy. Fourth one is the position of high value bad loans. Clear? Fourth one is the position of high value bad loans. Clear? So the correct answer here that is basically regarding the unclaimed deposits. Clear? That is regarding the unclaimed deposits. And one question more basically when any deposit becomes unclaimed, that is basically if the account is not operative basically from the last 10 years. If the account is not operative basically from the last 10 years, the account will be under the category of the unclaimed deposit and the amount basically will be transferred to the RP under DEF. So I request to all of you, please tell what is the full form of the DEF. Next question number 11. Indian banks are required, clear, basically Indian banks are required to transfer dash percentage of their annual profits to the reserve fund under the Banking Regulation Act. Clear, basically how much they have to transfer of their profits, clear, how much percentage of their profits basically to what? Basically to the reserve fund under the Banking Regulation Act, clear, basically to the reserve fund under the Banking Regulation Act. 25%, 20%, 15%, 10%, clear. So what is the correct answer here? That is option number B is the correct answer. That is they have to transfer 20%, clear, basically they have to transfer 20% of their annual profits. Okay, so Indian banks are required to basically transfer 20% of their annual profits to the reserve fund under the Banking Regulation Act, clear, basically to the reserve fund under the Banking Regulation Act. So option number B is the correct answer here. Now move to the next question, question number 12. Every banking company has to maintain in India, clear, basically every banking company has to maintain in India certain amount of assets under section 25 of the Banking Regulation Act. Clear, basically every banking company has to maintain basically certain amount of assets under section 25 of the Banking Regulation Act as at. First one is basically at the close of each year, at the close of each half year. Second one is basically at the close of the business on the last Friday of each year. Third one is basically at the close of business on the last Friday of each year. Or option number D is that at the close of the business basically on the last Friday of each quarter, clear, on the last Friday of basically each quarter, clear. So under the section 25 of the Banking Regulation Act, clear, basically every banking company has to maintain in India, clear, that is basically as at the close of business on the last Friday of each quarter, clear, that is basically of the each quarter, not of the year or not of the half year. That is basically they have to maintain quarterly basis. They have to maintain the data that is on the quarterly basis, clear. So option number D is the answer, that is quarterly basis. Now move to the next question, question number 13. Every banking company has to maintain assets in India basically equal to dash percent. How much percent of what? Under section 25 of the Banking Regulation Act at last Friday of each quarter, clear. Earlier basically in the previous question basically we have to understand basically they have to maintain at the last Friday basically of the each quarter, clear. Now basically what they have to maintain, clear, basically what they have to maintain and basically of what, clear, what percentage basically they have to maintain and of what basically they have to maintain. That is basically they have to maintain 75%, clear, basically they have to maintain 75% of their NDTL. This is NDTL or their DTL, clear. So basically every banking company has to maintain assets in India equal to dash percent, basically equal to the 75% of the net demand and time liabilities or demand and time liabilities, basically that is of demand and time liabilities of the Banking Company Act of demand and time liability, that is DTL, that is 75%, clear. So option number A is the correct answer here, clear. Option number A is the correct answer here. Every banking company basically has to maintain assets in India equal to 75% of the DTL, that is demand and time liabilities of the Banking Regulation Act as at last Friday of each quarter, clear, as at last Friday of each quarter. So option number A is the correct answer. Now move to the next question. Very easy question. So we will expect this type of question also in the examination. Clear, basically if a bank fails to maintain cash reserve, clear, first of all basically you have to remember that basically cash reserve basically we have bank has to maintain under section 42, that is of also of the Reserve Bank of India Act, clear, that is also of the Reserve Bank of India Act, okay. So if a bank basically fails to maintain cash reserve basically under section 42 of the Reserve Bank of India Act, so it has to pay a penal interest to RBI basically for the first day, clear. How much basically penalty interest basically they have to pay to the RBI basically for the first day? Bank rate plus 3% BPLR of the bank concerned, or bank rate plus 5%, clear, or bank rate plus 5%, clear. So basically how much they have to pay, clear. Initially basically they have to pay the penal rate, that is bank rate plus 3%, clear, that is bank rate plus 3%. Later on basically that will become bank rate plus 5%, clear. So basically for the first day it was bank rate plus 3%. So option number B is the answer here, clear. Option number B is the correct answer. Now move to the next question, question number 15. Which category of banks basically maintain cash reserve ratio under section 18 of the Banking Regulation Act? Clear? Basically under section 42. Under section 42 of the RB Act 1934, basically scheduled commercial banks have to maintain. Clear? And under section 18 of Banking Regulation Act, clear, basically that are not come under, that is banking companies basically that are not scheduled banks. Clear? That is basically banking companies that are not scheduled banks. They have to maintain basically cash reserve ratio basically under section 18 of the Banking Regulation Act. Clear? Under section 18 of the Banking Regulation Act. So here option number B is the answer here. Clear? Here option number B is the correct answer here. Now move to the next question, last question of our today's session. So liquid asset basically maintained by banks. Clear? Liquid asset basically maintained by banks under section 24 of the Banking Regulation Act. Clear? Liquid asset basically that are maintained by the banks under section 24 of the Banking Regulation Act are dash of the cash reserves maintained by the banks basically under section 42 of the Reserve Bank of India Act. Clear? Basically under section 42 of the Reserve Bank of India Act. Clear? Basically whether that liquid asset is to be inclusive here, exclusive here, dependent here, or partially inclusive here. Clear? Or partially exclusive here. Clear? So liquid asset that are basically maintained by the banks under section 24 of the Banking Regulation Act are basically exclusive. Are exclusive of the cash reserves. Clear? Basically are exclusive of the cash reserves maintained by the banks. Clear? Are exclusive basically of the cash reserves maintained by the banks under section 42 of the Reserve Bank of India Act. Clear? Under section 42 of the Reserve Bank of India Act, that is basically that are liquid assets that are to be exclusive. Clear? So option number B is the correct answer here. Clear? Option number B is the correct answer here. So in this session, basically we have to discuss up to this much point. In the next session, basically we have to discuss some more concept along with the question. Clear? Along with the question. So I request to all of you, please go through this video at least 2 times so that you are able to remember all these points. Clear? All these points. So thanks to all of you for joining this session.